In just 27 hours there is a new FOMC meeting, and right now there is 95% of probability that the Fed will cut the interest rates by another 25 BPS. Is that gonna help Ethereum to sustain its support above this descending trend line, and can that help us to pump by 420%? Let's analyze. Hello ladies and gentlemen, this is Samo from MyCryptoParadise, and let's start with Bitcoin. After Bitcoin we will jump to Ethereum. We will do multi-time frame analysis because we will go through weekly, daily and also 4-hour time frame. We will take a look at some technical analysis and also insider data and sentiment, so make sure you smash the like button and let's go through Bitcoin first. So right now, as you can see, we had got the reclaim of the key supply zone right here. This candle was the important one because we got the reclaim, and I told you in the previous videos that we will also, for a successful reclaim, need not only the break of this resistance zone but also a retest that will hold, right? And this candle held perfectly. That turned this resistance into support. I will turn it into green in a few seconds, but the important thing is that as it held, we started the surge higher, and with ParadiseTeam VIPs we have been prepared for it. As you can see, we have put above in the strategic point a limit breaker which was activated by the price action, and right now we have just took target free at $108,000 for 186% profit. Absolutely beautiful. And as you can see, strategically we have placed our target free sell limit order just below this main resistance, this major supply which is created by 618 Fibonacci retracement level and other important confluences that we have been analyzing with the ParadiseTeam. And the important thing is that right now, as you can see, right after we hit our target, the Bitcoin is starting to retrace on a lower time frame. But is this something dangerous? Well, if you remember, and if you are in our free Telegram channel and if you are watching our videos, you know that since 9th of December we do expect this kind of consolidation, right? Right here from the beginning of the crash where everybody was extremely scared, but it stopped exactly at our key support zone. I told you that we will start to move higher right now, and if we are able to reclaim this key supply, we will even go to 109,000 resistance, which is our major supply, and then we will consolidate and we will continue in this consolidation, and that this is going to be just an extension, right? And I also told you what is necessary for this to be good for altcoins. It needs to be a very calm consolidation. Bitcoin dominance needs to be decreasing during that, and the flow of smart money needs to start flowing into altcoins. So before we analyze Ethereum, which is basically the king of altcoins, one important thing we need to watch out for right now. So what do you see? If you are watching our videos carefully, you already see this beginning of creation of a bearish divergence, right? Why? Because the price is making higher highs, however the indicator right now, MACD, is creating lower highs. What is it? It is a classic bearish divergence. Price is making higher high, however the indicator is making lower high. Indicator, you can use any oscillator for this kind of analysis. At the moment we are using MACD because in the current market cycle it is the most accurate, and we are able to do the best trading decisions with this oscillator right now. We are also, before we entering some kind of crypto signals, we do multiple checks on multiple indicators, right? But for the sake of these videos I'm just showing you MACD because for this soft analysis it is completely enough. So what is important to see? That the momentum is decreasing. What does it mean? That the bulls are losing steam. Okay, so somebody is absorbing this buying pressure. Even though the buying pressure is there because we are correcting the higher highs, right? The momentum is decreasing because somebody is absorbing the buying pressure. So it might be some hodlers taking profits, some big players having salvos right here. What we will see when I will be sharing with you the behind the scenes of Ethereum, that's exactly what we are seeing right now behind the scenes. Loads of sell limit orders at these high levels, and they are absorbing the buy pressure basically. So what does it mean? Does it mean that we are going to the hell right from this price action and start dumping aggressively? No, it doesn't mean that. Even though it can happen, this analysis doesn't mean that we need to immediately start to crash. What does it mean? It means that the probabilities are shifting to the bearish side and for the cautiousness a little bit. Yeah, so we are working with strategies, we are working with probabilities, and we are making calculated decisions, not emotional decisions. That's very important, ladies and gentlemen, Paradisers. I believe that because you are here, you understand this very well, and you are not at the same place as 99% of other traders who are just desperately trying to get rich quick in crypto and doing so much of emotional decisions, right? It's not you. So right now what we can see is the higher probability that we will start to consolidate to the lower numbers instead of breaking above this resistance. Yeah, so it will be not only hard to go through this major supply just like that, but it will be even harder with this decrease of momentum. Yes, we do have this new bullish cross, but that is not confirmed yet. It will need to be confirmed once we close couple more candles, because this still can turn into just a bearish retest. You know that we have this bearish cross from November 25, right? So couple more daily candles will be needed to confirm this bullish cross. So right now either a recovery to the downside is higher probability, or consolidation. What is the least probability is just a shift through the resistance zone and start pumping aggressively from here. That is the lowest probability situation that can happen right now, just because of the things I have been sharing with you. But about the consolidation, as I said, if the money will be flowing out of the Bitcoin into Ethereum and altcoins, it will be good for our alt season to continue to resume, right? If it's going to be out of the market, that the Bitcoin will be sold into USDT and fiat afterwards, that will mean that the money are flowing out of the crypto market, and that will be bad for altcoins, right? So we need to take a look at the current price action of Ethereum. I will compare the current situation with the cycle we had in 2017, and again we will try to understand what is the highest probability scenario that will happen with Ethereum in upcoming weeks. So ladies and gentlemen, you know that we are trading inside of this symmetrical triangle, right? Since basically 2021 we have been creating this, and it's the similar one that we created in 2017. However, in 2017 this just took us a year to create. This, however, took us around 3 years. Okay, so what does it tell us is that because right now there is much more bigger players involved, more volume in the crypto market, everything is taking a little bit more time than it took in 2017, right? But the situation is very similar. There was, prior to creating this symmetrical triangle, a time of low volatility, right? Then we got this expansion that started to create a consolidation inside of that symmetrical triangle, and that's the same thing what we had prior to creating this symmetrical triangle. Low volatility cycle prior that expansion that started to consolidate and create this symmetrical triangle, right? So what happened afterwards? In 2017 we started to create this consolidation, and we started to create this descending trend line. That means we started to create this lower highs and higher lows. That is the key for creating a symmetrical triangle. And then calculate with me, how many times did we actually test it and attempted to break from this consolidation? So that was once, twice, thrice, and on a fourth time we have been able to break to the upside. And let's have a look what happened with the momentum. On the fourth touch right here, if I zoom into the momentum, which is important to analyze, isn't it? We can see that basically at the time of this fourth attempt of breaking to the upside, we had a similar momentum of the second attempt, right? So we created this kind of almost equal highs of a momentum on this fourth attempt of a breakout. So it looked very innocent. Loads of people didn't expect it, that we can afterwards pump by 300%, right? So it was a very innocent breakout. Also the volume wasn't quite there. As you can see, the volume started just afterwards to really pick up steam together with the momentum. And if I shift on a daily time frame, which will give us a little bit more data, because as you know, I told you everything was happening much faster in 2017, right? So let's take a look at the momentum on this fourth touch. That was also the one that broke the triangle, and we started the motive mood to the upside. As you can see, right on the first daily candle that broke above the descending triangle, trend line. That is something right now what we have on a weekly time frame. So the previous daily time frame is today's weekly time frame. So keep that in mind, okay? And as you can see, we got this bullish cross on the MACD indicator right here. The bullish cross was there, but the momentum was lacking ridiculously, right? As you can see right here, equal highs. So very innocent. And then we started the expansion to the upside. So if I shift back to the weekly time frame, let's have a look what is happening right now, ladies and gentlemen. So take a look on Ethereum right now, and we will analyze also the momentum and try to find some similarities that can help us with counting in the probabilities of this breakout being the successful one that will take us to the target of $20,000, or it is going to be just another fake out. So first of all, we can calculate the number of attempts we had to break from this descending triangle. So we got 1, 2, 3, 4, also 4, right? And the fourth one right now is the one that is being successful. At least it looks like that right now. It can still end up as a fake out, but at the moment it is the only attempt that is holding above the descending trend line, right? It wasn't able to do that in the third touch, in the second touch, nor the first touch, right? So this is the pretty similar thing of what happened in 2017. The fourth touch was the success one. What about the momentum? What about the MACD indicator? So we do have the bullish cross, that is nice. What about the momentum? The momentum is also looking very innocent, equal highs, right? So seems like the momentum isn't there. So all of these are indications of a similar behavior that Ethereum had prior to that expansion to the upside in 2017, and seems like it is behaving the same right now. However, we need to be very careful, because as a professional traders, we are waiting for as much confirmations as possible. So one thing is that we are taking the opportunities, right? So because we understand that we have been breaking above this descending trend line, you know that with ParadiseTeam VIPs, we have opened this beautiful swing trade, right? During the crash, we knew we are already breaking above the symmetrical triangle. So we took the opportunity because there was higher probability of a success. And as you can see, on a high time frame, we have cashed exactly the bottom, and right now we are at around 11% profit without any leverage. We are playing it safe, so at a strategic time we have already placed our stop loss to break even. But what's the reason we have placed the stop loss to break even is the understanding of this bearish candlestick pattern which just created on a weekly time frame. This candle closed like 2 days ago, and this is called a hanging man bearish candle, ladies and gentlemen. Look at this. It usually is a reversal signal where in that candle you have a long shadow, which we have, right? A small body and short wick above or no wick at all. So as you can see, we have no wick at all. That is the most bearish one. We have the long wick below us and very short body. And this is just a bearish sign that is making us to be a little bit cautious, right? So to increase the probabilities that this descending trend line will hold as a support, what we need to wait for is to create a bullish engulfing candlestick pattern. What that means is that we will basically engulf the previous bearish candle by creating another candle which is going to be bullish one and will close above the previous bearish candle body. What that means is that we are waiting right now for the weekly candle to close above here, and if that's gonna happen, it will negate this hanging man bearish candlestick pattern, and it will increase the strength of this descending trend line, which is hopefully will be acting like a support right now. If that's gonna happen, it will again increase the odds that we will start the breakout to the upside, ladies and gentlemen. Okay, so this is what we are waiting on a weekly time frame. Let's move to 4-hour time frame. You do remember that previously we have been watching for and analyzing this bullish pennant looks like this. If you are in our MCP school, you know exactly how to trade these, right? We broke below it, okay, which was weird because I told you if the trend is prior to creating this bullish pennant formation bullish, the higher probability is for a break higher, right? So we got very cautious right here because we started to break lower. We stopped exactly at our 0.618 Fibonacci retracement level, which I've created by analyzing this wave right here. I've put one pin right here at the top, the second one at the bottom of this wave, and that created for us a beautiful analysis of where the next support is going to be, and it perfectly stopped right there. So basically what we have done, we have extended the trend line right here to the support, okay? Then we have been watching for this moving average trend line to turn back to bull trend by closing a candle on 4-hour time frame, because we have been using this for a medium time frame analysis above this moving average trend line. And as you can see, afterwards we started a nice uptrend where we started to create higher lows and higher highs, and that also worked for us to really increase our position sizing in Ethereum, and we started to go a little bit more aggressive because the probabilities increased, right? And this is just what professional trading is about. You just monitor the market, monitor the probabilities, and then execute on the opportunities. So this is basically the triangle, right? We pumped above it, we waited for a retest, and then we got a beautiful entry zone. As you can see, on a 2x leverage, we are already up 4%, ladies and gentlemen, just by understanding very nicely the price action. But we have moved our stop loss to break even on this one as well, because take a look at the momentum. The momentum once again is creating a bearish divergence, okay? So we secured our position just because of creating this bearish divergence and also having a little risk of creating a bearish cross. So right now what we are waiting for is some nice momentum coming back on Ethereum, really being able to reclaim back above the previous high right here, which stopped exactly at our Fibonacci retracement level right here. And if we are able to do so, we can start trending higher towards our next resistance, which is right here at 1.618 Fibonacci retracement level right here, which also nicely confluence with the target of a bullish pennant formation. Again, if you are in our MCP free school, you exactly know how to trade these bullish pennants. I will leave for you a link in the description so you can get educated very nicely and do nice trades yourself as well. So basically you calculate the percentage of the flagpole, you put it to the breakout point, and as you can see, it nicely confluences with our Fibonacci retracement analysis as well. And that's how you can really nicely take the targets at the tops, that means sell the tops and buy the bottoms at the best working supports, right? So that's for the case if this 4-hour candle right now will be able to reclaim above the moving average trend line and hold there, and above the descending trend line as well. And we need the momentum to go back, so we are watching for that, ladies and gentlemen. Very quickly about what's going on behind the scenes, why we having this bearish pressure right now, is one of the reasons is that the big players are distributing. It's very nicely seen here on the order book side. That means limit sell orders are being hit together with a market buying pressure. So this is basically what's pushing the price higher, and this is what's keeping the momentum down, right? So the sell limit order, somebody is distributing on the buying pressure from retail. So this is retail, this is big players, yeah, and that is creating the bearish momentum, the bearish divergences, okay? So what we need these sell limit orders that are still above us, more of them right here, to sell at market price basically, or leave their order book, okay? And then we need accumulation, not distribution. We need accumulation on the drops. Still we are dropping and there's no accumulation going on. There was little accumulation right here. You see that white color, a little white color. So we need that in a big scale. And this candle, this red candle, is bearish a lot because we don't see any accumulation right here. So that is also the reason why we are being very careful, not only about the Bitcoin price action, but on our altcoins and Ethereum as well. But that can change, and I will be updating in the next video the money flow, where the smart money are flowing, because I will not be able to push everything into this video. So if you don't want to miss it, smash the like button, subscribe so the YouTube algorithm can announce for you when the next video will be out, and I will see you again on Thursday. Cheers.